29,916. But we're going to quickly talk to Onose Sotie now. Is going to give us more insights as to what happened in the market, but basically to give us an explain out as to what the FTSE Russell means about that downgrade. Good morning, Onose. It's good to have you on the program.
Good morning, Will. Thanks for having me.
Onase, I'm sure you had a conversation. We're just talking about this downgrade, a further downgrade. See, we're on the frontier level before. Now we've been reclassified to, an unclassified market status. It's quite worrisome for me, but I did speak to someone else and said we shouldn't be worried. But what do you think? What's your take on this?
Well, it's not a great place to be. But then again, like you said earlier, it's not something that has an immediate negative effect, right? So what the FTSE does is it creates a lot of indices that the financial markets could use, a lot of institutional investors could use, to invest in to track various markets and various market segments. Now, if you look at the frontier markets, now although now stocks from the NGX appears on about 5 or 6 of the FTSE's indices, but everyone is talking about the frontier market. If you look at the frontier market, now stocks from Nigeria constitute about is it the third or fourth, in terms of weighting, about 9-point-something% behind Vietnam and I believe Bangladesh. So Nigerian stocks make up quite a significant portion of the frontier market. Now, unfortunately, other institutions, especially global institutions that might be looking to frontier markets, because frontier markets have the ability to generate, I guess, higher yields or higher returns than some of the more established markets, depending on the macroeconomic conditions in the world and in the developed economy. So now institutional investors, now a lot of them just rely on these indices, because it's cheaper than having to come up with your own mathematical structure or mathematical way of tracking the stocks and the markets for various countries. Now the problem with this now lies in the fact that a lot of institutions, when they want to now look into frontier markets or emerging markets like Nigeria and basically like Nigeria, our country or our stocks will no longer show on these frontier market indices. So basically, it's just kind of make Nigerian stocks a little harder to find, for institutional investors that are not already aware of our stocks or the situation in our country. Another repercussion might be the fact that this might now be a signal to foreign investors that the investment situation in the country is not ideal, because if a major investment management company like the FTSE Russell is saying, okay, we need to get these guys off our list because institutional investors are saying they cannot repatriate their funds, then other investors, maybe even foreign direct investors, might now look at that and go, so if investors in the capital market can't repatriate their funds, what's the guarantee that we can repatriate our funds if we invest in this, in this market and in this economy? So those are, on the surface, those are, I guess the two main issues that the updates might have on the market. But then there's now like another hand, where some might say, okay, it's like I said earlier, some analysts might tell you it's not exactly a bad thing. Even this morning I was discussing it with the senior colleague, and he said, it's a good thing. On one hand, that might insulate our market, because if you look at 2022, that was last year, I believe. Last year, the S&P 500 declined by about 20 to 22%, which was significant. One of the most significant declines since 2008, or even the Great Depression in the 50s. And if you look at a lot of markets, a lot of equity markets, even around the world, a lot of them declined last year. But the NGSE, or the NGX rather, the NGX ASI closed the year at around 19.89%. And that's because there was significant FPIs flowing out of the market. So that kind of now insulated the Nigerian market from a lot of global economic headwinds that normally affect the market. So on one hand, we say, FPI, we might see further FPI outflows, from our market because, investors, they want to be, risk-averse investors are like, we don't really want to deal with the FX situation. And on the other hand, that might now end up insulating our market so that, when, if anything happens in the global space, maybe recession or one thing or the other, that might not really affect the Nigerian equities market as much. So you have investors looking at that and thinking, okay, so that's one of the positives of this happening.
So that's always had its good and the bad side of it, but it's something I just want to understand better, and I'm sure a lot of people want to know. The FTSE Russell, they say that once Nigeria is able to clear its FX delays, the backlogs and every other thing, that will be assessed as a new market according to the FTSE equity country classification process. So is it that we'll be, we have to sign up again as the NGX? What is this about? Can you just explain this?
Okay, so like I said earlier, this isn't exactly shocking. It's not new news because even since September, I think the 30th of September last year, Nigeria's market has been, under consideration for, reclassification. So it's actually been a while. Now FTSE has actually been considering this for a while. So there's usually that period for what is called the entire process is called reclassification, basically. So now we have been reclassified to an unclassified, I guess, moniker. Now we have a $10 billion FX backlog of investors, investors and in the market. The FTSE is saying, look, if you guys can get, your FX situation under control and show us over a certain period of time that the FX situation is stable, because last year, when we were under reclassification, they didn't just, unclassify us then. They kind of watched our market, to see what will happen. And then when we floated the currency, a couple months ago, they kept watching to see if that will have, a significant effect. And it's because they now believe that, look, you guys have floated the market, and while, yes, your I&E window now better reflects, the parallel market, there's still the supply issue. So the supply issue that plagued the market before is still there. So they believe that, okay, even with this FX issue, with the whole willing buyer, willing seller system actually being implemented at the INU window right now, it's not having the results that it's not generating the results that would naturally keep us on that list, or that would allow institutional investors to adequately use the index that FTSE has created, or the indices that we are a part of, which is and that's really the problem, is that investors have issues now basing their own ETFs on those indices. And if that becomes an issue, then further down the line, that might not be an issue for FTSE itself, with the validity of their indices when it comes to either ETF sampling or full replications from institutional investors. So now what they're saying is, look, if you guys can get your FX under control and show over a period of time, maybe a couple of months or maybe a year, that look, our FX situation is now stable, then they can now say, okay, now when we see that, when you have proven that, we'll happily start another process of reclassifying you, and maybe putting us back into the frontier market, or putting us into another category. Okay,
thank you so much, Anose Asote Naolo, investment analyst, Mainstreet Capital Limited, for sharing those insights. It's much needed at this time. The FTSE Russell is going to be watching, and we also keep watching to see how this pans out. Thank you so much for joining us on Business Morning.